Hello and welcome. This is Business Incorporated on Channels Television. I'm Chimeze Obi Iwago. On today's program, the 28th World Economic Forum on Africa wraps up today in Cape Town, South Africa. Nigeria uses tax credits for private firms to boost infrastructure. Plus, Tunisia's annual inflation rate rises to 6.7% in August. Let's get the show started now with the markets. And looks like a Green Friday across markets here in Africa as all indices were up at intraday. Here in Nigeria, the NSE gained a whopping 1.20% as market heavyweight MTN Nigeria rises 5.03%. In South Africa, the JSE index added 0.44% at intraday. The EGX 30 in Egypt closed for the week positive on Thursday by 0.62%. Kenya closed positive on Thursday. And markets in the Middle East ended the week on Thursday mostly negative except for Dubai stock market, which was helped by its largest lender, Emirates MBD. Dubai's index closed 0.38%, with Emirates MBD increasing 1.5%, and Dubai Islamic Bank, the United Arab Emirates' largest Sharia-compliant lender, adding 0.6%. The Abu Dhabi index lost 0.21% as Abu Dhabi Commercial Bank ended 1.5% lower. In Saudi Arabia, the index slipped 0.1%, driven down by a 0.9% fall in market heavyweight Saudi Basic Industries and a 1% drop in Saudi Telecom Company. Qatar's index also ended lower to close at 0.41%, down, with Qatar National Bank, the Gulf's largest lender by assets, falling 1.2%, and Qatar Islamic Bank down 1%. And Europe, markets traded mixed on Friday morning as investors monitored Brexit uncertainty and awaited a fresh batch of economic data. The German Chancellor Angela Merkel was welcomed with military honors in China today, with a business delegation in tow, hoping to secure an economic agreement. Well, let's talk to my colleague there at the Frankfurt Stock Exchange, Ulrich Batz, for more. Hello, Ulrich. Good afternoon.
Good afternoon to you as well.
So, Germany's Chancellor Angela Merkel is in China. What is the German business community hoping for as an outcome?
I think all sorts of contracts emanating especially from the businessmen who are accompanying her, people like the CEOs of Siemens or Volkswagen, major companies, but also a little bit smaller projects, but not less interesting, like, for example, the project of the Deutsche Post's street scooter unit. They make little transport vehicles that basically take the product, the package, the last mile to the customer. They're electrically driven, and the Deutsche Post announced that it's going to have a joint venture with a Chinese automaker called Chery on producing and developing them right in China, and also wanting to sell a lot of these in China itself. On the major fundamental beefs that companies around the world have when they go into China, people aren't expecting progress. I talked to a number of people in the know on China who work out of Frankfurt here. One recently traveled throughout Asia, and he just doesn't see the readiness on the parts of the Chinese to make any concessions, major concessions at least, on the requirements for joint ventures, or on regarding intellectual property rights, copyrights, or on providing, for example, relaxing rules on the question of management. And it's an interesting trip, but the business community here is not really expecting a major shift just because Angela Merkel is in China.
All right, markets in Europe are closely tracking developments on Brexit and also looking at fresh economic data. Tell us more.
Yes, U.S. labor market figures for August just came in. They were obviously disappointing to the market. You can see behind me the DAX dipping as a reaction, not falling to the ground, but markets apparently taking the result as perhaps a hint that the Fed might have less pressure to cut rates when it meets later in the month. Earlier data coming in from German production, and that number was slumping in the month of July, 0.6%. It went down month on month, and it's the second time it's gone down in the monthly comparison, and the ninth time it's come down in the yearly comparison. And when you look at Europe, for the Eurozone, you had the GDP, and that also shows the Eurozone economy losing momentum. This, of course, all due to the tension over trade and anxiety over Brexit.
Well, it's been an exciting week in the markets. What are you expecting to move markets next week?
Well, next week is a really interesting week because, we'll have all the topics that were topics this week and sent the market down and then up, like Brexit, like Hong Kong, like the Italian government, and like trade. But you'll specifically have the interest rate decision by the European Central Bank. It meets next Thursday, 12th of September, and most people are expecting a rate cut. Not across the board, but at least in the deposit rate, when banks park their money overnight, that's expected to go even lower from minus 0.4% at the moment to perhaps 0.5% minus. So banks basically have to pay the ECB money to be able to park their money there in relative safety. And people are also expecting a message on bond buying. Is it going to restart? If it does, when and how much? So I think the markets are going to get more and more nervous the closer Thursday rolls around in the time for the announcement from the European Central Bank. And a major show here in Frankfurt for anyone who's interested in automobiles and everything to do with automobiles. But of course, automobiles being such a key industry for Germany, for Europe, and for many other countries. We just talked about China. It's a big industry there as well. It'll be very important what kind of trends are presented there. How optimistic the people look and sound from the companies who are presenting there. And of course also what new developments the companies will be rolling out in terms of electrical vehicles and self-driving ones.
Well, we'll definitely keep an eye on those developments expected next week, particularly the ECB. Thank you, Ulrich. It's been a wonderful week. Enjoy the rest of the day.
Thank you as well. Thank you.
And in the UK, sterling hovered close to a 6-week peak in the morning amid hopes Britain could avoid departing the EU without a deal. The UK currency had fallen to a 3-year low earlier in the week after the new Prime Minister stoked fears of a no-deal Brexit. Well, let's get an update from Juliana, my colleague from the London studios. Hello, Juliana. Good afternoon.
Good afternoon, Chimaze.
Well, it's past intraday trading. How is the sterling behaving at the moment, as well as the equities?
Well, the equities are not doing too good, actually. We just got an announcement that two of those High Court injunctions trying to stop the proroguing of Parliament has actually been thrown out by the judge. So it means that the likelihood of going into a no-deal Brexit has increased. Let's look at those numbers. At intraday, the FTSE All-Share is down, the FTSE 100 is also down, and the FTSE 250 is down as well. Hopefully the viewers will be able to see those specific figures right beside me. And of course, as you said, earlier this week, the currency was doing really well. Sterling was up at a 5 to 6 weeks high against the US dollar and also high on the euro. But that has changed as political uncertainty is scaring everybody. So today, at the moment, sterling is down on the US dollar, down on the euro, and also down on the Japanese yen.
All right. Data coming from Halifax House Price Survey shows UK house prices edged up last month, but the trend remains predominantly flat. Is this a case of buyers and sellers being cautious in the face of Brexit?
Absolutely. All consumers are cautious at the moment. But as you said, UK house prices has risen at the fastest pace in the last 4 months. It rose by 1.8% in August, comparing it to this time last year. But there has been some scrutiny. So on the surface, it looks good, but observers and analysts have been digging much deeper. Halifax have actually been scrutinised because the data and how they measure inflation and house prices, some people are saying is just really old-fashioned. In July, they actually put the house price figure raising at 4.1%, but once they'd used this modernised reading of how to measure house prices, it actually dropped to about 1.5%. Also, there have been some observers that are saying that the only reason why house prices are on the rise is because there are just simply a shortage of houses. A lot of people are keeping their houses like a piggy bank. You know, they don't really want anybody to touch it but them. So nobody is really selling their houses. And a lot of builders and manufacturers, which is what we learnt from those poor PMI figures, are just simply not building. So, of course, any percentage point, anything in the red, in the green, is good for Britain at the moment. But if you dig a little bit deeper, not all is good as it seems.
All right, let's look into the corporate world. What company news is making headlines today? And the week has ended today. What is your outlook for next week?
Well, you know, not good news for retail in the UK again. Philip Green, he's that embattled chairman of Arcadia Group. And today they've just released some figures about Topshop. Topshop is a very popular brand. I'm sure viewers all across the world will have heard about it. But they've announced that they, this year, have lost £169.2 million worth of profits. And this is a familiar trend that we've been seeing over the past couple of months. Of course, M&S were relegated from the FTSE 100. House of Fraser has been sold to Mike Ashley, the guy who owns Sports Direct, and Debenhams have had to hand over to their shareholders. So it's not good. Of course, Topshop boss Philip Green also owns other retail outlets like House of Fraser, not House of Fraser, sorry. He also owns other retail outlets that are doing very bad as well. But the fact that Topshop has announced these profit losses in the same week that Marks and Spencer's has been relegated just doesn't spell good news. And of course, we've seen the likes of their competitors like Boohoo Online and Primark on the high street just compete with their prices.
Still wondering what's happening to those retailers. Well, it's been a nice week with you, Juliana. Thank you, and enjoy the rest of the weekend.
Thank you, Chimothy.
In Asia, markets gained on Friday as investors watched for developments on the trade front after global markets rallied on the back of news that the US and China could return to the negotiating table next month. Mainland Chinese stocks rose on the day, with the Shanghai Composite gaining 0.46% and the Shenzhen Composite advancing 0.355% to approximately 1,657 points. Hong Kong's Hang Seng Index also added 0.56% as of its final hour of trading. Rating agency Fitch downgraded the city from AA+ to AA on Friday following a protracted period of unrest that has lasted for months. In Japan, the Nikkei 225 closed 0.54%, while the Topix index added 0.17%. South Korea's Kospi ended 0.22%, while the ASX 200 in Australia advanced to 0.52%. In the U.S., stock index futures traded higher on Friday morning as investors looked ahead to non-farm payroll numbers due later in the day. Well, it's about now reported. At 5:31 a.m. Eastern Time, Dow futures are traded 82 points higher, implying a positive open of more than 50 points. Futures on the S&P and Nasdaq also traded higher, but pointed to a slightly negative open. Market focus is largely attuned to global trade developments after the U.S. and China agreed to hold high-level talks in early October. On the data front, investors will be keeping an eye on August's non-farm payrolls and unemployment data that will be released, where investors will look for signs about the health of the U.S. economy. And oil prices edged higher in early trade today, with crude benchmarks poised for multi-week gains amid a sharp drawdown in U.S. crude inventories, while trade tensions eased after Washington and Beijing agreed to hold high-level talks next month. Brent crude was up 17 cents at $61.12 a barrel, while U.S. West Texas Intermediate crude was up 16 cents at $56.46 a barrel. Brent is set to mark its fourth weekly gain, while U.S. crude is headed for a second weekly rise. And data from the National Institute of Statistics shows that Tunisia's annual inflation rate rose to 6.7% in August from 6.5% in July. Now, this comes even as the country's central bank raised its key interest rate to 7.75% from 6.75% in February to combat high inflation. Still ahead on the program, the 28th edition of the World Economic Forum on Africa ends today. How successful was it? We'll find out after the break. Do stay with us.